Microsoft reported quarterly financial results that are sending the stock price higher by more than 7% in the aftermarket hours following the earnings announcement. Of course, I'm happy about that. I've had Microsoft stock rated as a buy all year long. In this video, I'll review what Microsoft reported this quarter, the reasons why the stock price is soaring, and I'll share with you my updated proprietary discounted cash flow valuation model, which calculates a fair value for this stock. I'll also update my recommendation on Microsoft stock and let you know if I think it's a buy, hold, or a sell.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so Microsoft reported a significant increase in revenue, 18% to be precise, up to $76.4 billion. Gross margin improved to $52.4 billion, with operating income jumping 23% to $34.3 billion. The operating profit margin, which if you take the operating income and you divide that by revenue, that's how you get the operating income percentage, came in at 45%, which is up 2 percentage points from the same time last year. An operating income percentage of 45% is among the excellent tiers of companies. Most companies would envy, 99% of companies would envy an operating profit margin of 45%. In more positive news, if you remember when I did my Microsoft preview video, I told investors that one of the big numbers to look out for is the commercial remaining performance obligations, and that number increased meaningfully from the previous quarter by roughly $53 billion, up from $315 billion up to $368 billion. That's good for a growth rate of 37%. The highest growth rate, if you look back, if you exclude that big burst in Q2 2025 with that deal with OpenAI, it's the highest growth rate in the previous 5 quarters, or you can look at it as the second highest growth rate over the previous 5 quarters. And of course, you can understand why Microsoft is spending so much money to develop its artificial intelligence capabilities when it's seeing such strong demand for its artificial intelligence services. Of course, uh, not all of that commercial remaining performance obligation is related to AI, but its investments in the data centers optimized for AI are helping all segments of its business. And if its business is growing so robustly and facilitated by the improvements with AI, of course, it's reasonable to see the management team investing in this category. One example is how the company's artificial intelligence capabilities are helping its suite of Microsoft Office products, including Word, Excel, and PowerPoint, etc. Those are being enhanced with artificial intelligence, and then Microsoft can charge customers a higher monthly premium to use those services because those services are now enhanced with artificial intelligence. Let alone other enhancements like Windows AI-based PCs and AI-based support systems for its Windows operating systems. And then, of course, Microsoft also has the cloud computing segment, the cloud services segment, Azure, which sells computing power to companies like OpenAI, which use it for computing the requirements for ChatGPT. Every time you put a search into ChatGPT, it needs computing power to serve you the results, and it buys most of that computing power from Microsoft. The company's capital expenditures totaled $24.2 billion, which was up by 27% year over year. But still, even after all of those investments, the free cash flow in the quarter was up 10% to 25.6 billion annualized. That's 100 billion, more than 100 billion in free cash flow. That's because the cash flow from operations came in at 43 billion, which was up 15% year over year. So even though the company is spending so much money building these data centers optimized for AI, there's sufficient cash flow to justify those investments. The company's not borrowing or selling stock to fund these investments. It's funding these investments through cash flow from the business, which then is reinvesting in the business, which is creating more cash flow, which is then reinvesting in the business. And that positive virtuous cycle keeps fulfilling. And the company's saying, and most experts are saying, that we're still in the very early stages of the improvement of artificial intelligence. And so companies like Microsoft can continue benefiting from these investments. Now let's talk about valuation and whether or not I still think this stock is a buy. I will say that valuation is starting to get stretched. Microsoft is trading at a forward price to earnings of 35, which isn't ridiculously expensive. I wouldn't even say it's expensive. I would just say it's reaching the higher end of where I would call fairly valued for this stock, according to its prospects, according to the business characteristics. A forward PE of 35 is like on the higher end of where I would call fairly valued. In fact, all the way up until maybe a forward PE of 40, I would say is fairly valued for Microsoft business, given the remaining performance obligations, given the 45% operating profit margin, given the solid returns on invested capital, given the double-digit, close to 20% revenue growth rate. You know, a forward PE of 40 would be fairly valued. A forward PE of 30 or below, I would say, would be undervalued. So anything uh, between 30 and 40, I guess you can call fairly valued. And then if you want to get more specific, anything closer to a forward PE of 30, you can start to see as being undervalued. And anything getting closer to 40, you can start to say that it's getting closer to being overvalued, but I wouldn't say it's there yet. So in other words, it's a fairly valued business. And then looking at my proprietary discounted cash flow valuation model for Microsoft stock, which I updated today, the current market price, if you include the aftermarket move, this spreadsheet updates automatically during market hours, during trading hours. The market price updates automatically. I have formulas embedded in this Google spreadsheet. The current market price, the number of shares outstanding, and the company's beta all update automatically, including the market cap. These update automatically as the company reports new financial information. So if we think about the market price at 550 and we compare it to my intrinsic value, which I calculate a fair value for this stock at 450, looking at my discounted cash flow model, if we apply a margin of safety, I will start to say that it's looking like it's slightly overvalued also. Slightly, right? So closer closer to being overvalued than undervalued, but still not anywhere near where I would say it's expensive, okay? So both valuation metrics so far point to the valuation getting stretched, but still nowhere in the levels where I would say, wow, it's getting expensive. I wouldn't want to own this stock, or I wouldn't want to buy this stock, right? So as I mentioned, I've had Microsoft stock rated as a buy all year long. And following these earnings results, I've seen improvement in the company's overall business, overall characteristics, right? The operating margin improved, the CRPO improved, revenue growth improved, and the prospects for the company improved. So all that being said and all of the improvement, I would be willing to pay a premium valuation for this stock. It's not quite selling at much of a premium valuation. It's closer to being fairly valued. And again, this is one of those Hall of Fame businesses that I would rank in that category, where wherever I see this kind of a quality business selling at, fair value or close to fair value, I would think it's a great deal for long-term investors. So I will reiterate my buy recommendation for Microsoft stock following its earnings results. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.